Good morning, traders. It is 8:03 a.m. Chicago time. It is Thursday, August 14, 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. As always, quick rundown of the news. See what's driving us. Key driver overnight, German Q2 GDP misses Q on Q, comes in at negative 0.2% versus negative 0.1%. Consensus year on year is at 0.8 versus 1.3 consensus. 0.8 versus 1.3. So this has had some after effects. This was the worst GDP print since Q1 2013. Following that, Eurozone Q2 GDP misses Q on Q 0% versus 0.1% expected. And on top of that, France's Q2 GDP misses Q on Q 0% versus 0.1 consensus. Year on year, 0.1% versus 0.3 consensus. The French finance minister says that France won't meet its deficit target this year, cuts 2014 growth target to 0.5% from 1%. So just a lot of stuff piling on for Europe here. German 10-year yields, which I'll show the Bund chart for. German 10-year yield prints below 1% for the first time in the instrument's history. German Bund's making all-time highs. Treasury prices move, or yield moves opposite of Treasury prices. As the Treasury gets more expensive, the yield drops. Again, German 10-year yields print below 1% for the first time in their history. Following the European stocks climbed following positive comments out of Putin regarding a Finnish PM saying that Europe's not considering further sanctions against Russia. Putin is speaking in Crimea in the parliament, and he's discussing setting up a military presence in Crimea. And then in the Middle East, Israel and Hamas agreed to extend the ceasefire for 5 days. The UN declared level 3 emergency in Iraq to facilitate aid. And then finally here in the US, Cisco earnings beat but says it will cut 6,000 jobs. Walmart Q2 EPS comes in at 1.21 in line. It further cuts the year's EPS forecast range to 4.9 to $4.90 to $5.15 from $5.10 to $5.45 for the year. So something something interesting there for stock traders. Looking at the calendar ahead, not much on deck. 9:30 natty gas. We don't have an estimate, but the prior was 82 billion. And then we have a 12 p.m. Central 30-year note auction. It's for 16 billion. Tomorrow we still have the UK GDP, US Empire Manufacturing, US PPI, US tick flows, US industrial production, and then we also have the University of Michigan Confidence, which is the only medium importance number of the bunch. University of Michigan expected at 8:55 a.m. Central Time. Take a quick look at yesterday's action. So to recap yesterday's expectation, if you were listening to the Trader Bite, the market was trading on the edge of the prior day's range, inside of Monday's range, and the expectation was for responsive selling, potentially to 31 actually, or 32, and then 30 even. But what was really expected, what the primary trade idea was that was discussed yesterday, is for the market to continue higher and test 45 even to 45.75. So if you listen to that Trader Bite again, you'll find those are the key targets to test above. Market gives us a pullback to 34. I expected it down to, I think it was like 33 to 31.75, 31.50 for any responsive selling, and then I had indicated that I'm expecting chop for a push to 45 or 45.75 on the day, and said that that would be well within range. The market pushed to 34 early on, so let's run it on the chart here. It opens out of range, tests higher. We put in an opening swing high at 39.75, pushes down to 36.75, puts in an opening swing low, pulls back to VWAP mid, and then starts to break lower as the market, as it pushes into the prior day's range. Could not quite get to the HVN here, but it pushed to 34, and then once it took out the mid and VWAP and back into the OS, the expectation was for new highs. Here's a little head fake here, and then again finally it consolidates a little bit and then finally starts to move up towards the OS high. Lots of bounces to, off the mid, which is the open and VWAP yesterday. Very, very choppy trade, and then finally we get the break higher to 44.75. Nice, almost 8-point rotation here, 7.75 points. Pretty good delta, as you can see here. So all of this accumulation here finally dissipates on that move. So we expect a higher high on that move. This is an impulsive move, and we get it at 45.25, and then the market starts to correct, and then it's pretty much chop all afternoon until a final attempt at new highs on the close, which gives us a double top by the end of the day, which is a rare occurrence statistically. Double top by the end of the day. So the expectation overnight is a further push higher. A push through 46 brings us into the upper MC. The upper MC or balance is right here. So 45.75 is right here. See that low of the balance here, 45.75. And if you go back in time, you'll see that this 45.47 area was a prior high of year, and it's a low volume node. Every time we've come down here, we've had a quick and swift rejection, and then once the market pushed through into 40, through the 46 and up, it's basically starting to cut into the prior balance high. The July 31st drop was from 52.75 down to 23. It left a small gap. I have that gap marked up here, right here. The gap zone is from 52.25 to about 56.50. Remember, 53 is the next key area above. And so here's the overnight. The overnight went ahead and pushed the high to 49. So the market actually fulfilled our primary trade idea yesterday up to 45.25, and overnight to 49. Let's look at the overnight chart. So here it is. It immediately upon opening, it pushes right through that double top. Like I said, it's rare for the market to leave a double top behind. Pulls back to the point of control, to the tick overnight, sits sideways through the Asian session, and then once the European session kicks in, you get this violent chop, and then finally a break to 49, and the market's pulled back all the way to the low. It's putting in a low at 42.50. Double bottom here, an inside double bottom. The low of the session is 42. Very bulky, boxy profile. No real rejection of anything. It's still a fairly weak high, but it's also a weak low. Hard to ascertain anything from the overnight session. Inventory is neutral. We are right at where we closed yesterday. There's really nothing to glean from the overnight session except that it had pretty good volume, 220,000 versus 125 or so lately. So on the open, the expectation going forward for today's session is that the market will likely chop around in this area, which is a high volume node from yesterday. We're likely to take out this double top again on the day session to complete that move. And then I'm expecting that it's going to attempt to go to 49, and then it's likely to fail, push the overnight low, and then get stuck somewhere in here, down to probably 39.75, the key LVN here, or 1940. That's what I'm expecting. If the market happens to get down there and break through, then the expectation is for 30 on the outside. That's about 15 points away on the downside, within range, but a little tougher to get to given the most recent ranges. If, however, it breaks to 43, comes down to this 40 area, and then takes a bounce and starts to move back up towards the high, then we're looking for the overnight high to go. 51 is the next target, 53 above there. Okay, so that's what I'm looking at for today. Could go either way. We've kind of accomplished what we wanted to accomplish here. Don't forget that this move here is behaving like a retracement so far. Not such great news out of Europe, but I don't know if the market has incentive enough to begin to sell off. In other words, do the big players, the long-term investors, the higher-end OTFs, have an incentive to start liquidating their long positions that they've been holding for 2 years? I'm not sure that they do. I'm seeing this as a retracement of this move down, and 45 was the key area to test. This is the area, as I said before, this is the area that sellers need to defend. So if the sellers are going to step in, it's likely to be in this area, 45, 47, and start to try to push to depress prices lower, to continue to keep prices down, bring them back into 32.50 or so, and then push lower once again. We'll see how that shakes out. Today is quite important in that those sellers need to step in today. If prices get away and they start to move towards 53, then sellers could back off, and then we start to look at 65, 71 and a quarter, and so on. So that's all I have for you. Additional headline risk. The news flow as usual. It seems like everything is tempering down. There isn't all that much to cover as far as headline risk, but keep your ear to the news. If you don't have a news feed, I suggest you look at financialjuice.com and several other outlets for live news, as well as following Reuters and so on and so forth on Twitter. I'll keep my commentary coming during the day. I'll try to post as much as I can as far as what's flowing and how the trade's flowing for the first hour, and then I pretty much quiet down after that as the market takes its pace, and I focus my comments in the S5 chat room. I'll talk to you tomorrow. Good luck, and take care.